Hello and welcome to Small Gold's In Case You Missed It, Top Gold and Silver Stories from the week ended July 9th, 2016. You can follow along with this podcast by clicking on the link below. It'll take you through the In Case You Missed It entire blog post, and you can follow along, or you can check it out later at your leisure. We don't cover everything that's in the blog post in the podcast, so if you want to go back and check it out later, check out the link at the bottom of the post. And while you're at it, also subscribe to smallgold.com, and you can have this email sent to you every week in case you missed it. It'll be sent to you at the end as soon as it's published, along with a link and an embedded YouTube so you can follow along. Okay, let's get started on what happened last week. The big story last week, I guess in general, was the FBI's decision not to recommend charges against presidential candidate Hillary Rodham Clinton, despite a series of extremely careless actions in her handling of classified information. FBI Director Comey decided not to bring the case because it seemed like he just didn't want to, but that he said there was no precedent and no reasonable prosecutor would bring such a case. Many disagreed. I'm not going to get into that here. I think that there was a case and it could have been brought, but Hillary's husband visiting with Loretta Lynch, the whole appearance of this not being fair seems to be what a lot of people think, and I would agree with that. Of course, in legal terms, you can never prove intent specifically in a case like this, but there were enough facts, there were enough circumstances that there could have been a recommendation to indict Miss Clinton, but it seems that the FBI director, Mr. Comey, did not want to do so. Enough of that. Back to economic news, the big story of the week was the solid jobs report with the robust job gains that came out on Friday was basically ignored by the market, other than the initial reaction that the algos have when such a report comes out. I think that the jobs report now is no longer, at least for the next couple of months, will be given the high status that has been given because of all the global economic uncertainty and Brexit and so on. So normally the Fed would pay a lot of attention to the jobs number. The market would pay a lot of attention to the jobs number. But given that the last two numbers before this one were relatively weak, and if you smooth them out over 3 months, there's still not any indication that there's some type of big, robust job recovery happening. So unless you see a few more of these reports, we're probably not going to, the markets are probably not going to pay a lot of attention to them. Gold and silver. Gold closed up about almost 2% from 1341 last week to 1365 this week. Silver closed up about 2.5%. It was 1975 an ounce at the end of last week, and it's up to $20.25 as of yesterday. The gold silver ratio continues to go down. It's now at 68.67 to 1. It had reached as high as I think 83 to 1. But if you look at the chart here, you can look at all of the charts. If you click on this link, the gold silver ratio, look at the 1 year, the 1 month, the live chart, the 5 year and the 10 year, you'll see that even though we've made progress in reducing the gold silver ratio, it is still at elevated levels. I think it was all the way back down to about 40 to 1 when silver was up around $45-50 an ounce and gold was about $1,800 an ounce. Since then it's climbed, it's starting to move down, but there's a long way to go to reach, I guess, historic norms. Chart of the week is the gold ETF Surge inflows of gold into ETFs, especially the GLD, which is this yellow bar on the graph here. Now this chart shows that a lot of gold has flowed into about 15 million ounces just since the beginning of this year. This shows, though, that Westerners tend to invest, institutional investors, in ETFs rather than, like in the East, in actual physical bullion. And we get to the U.S. Mint sales for gold and the Perthman sales, they're good, but they don't reflect any type of the mania that's moving into the ETFs. So Westerners tend to buy this paper product, and Easterners tend to buy the real thing. But we are not seeing any big increase in physical gold sales, not nearly as the amount that we're seeing in the mania for ETFs. And a lot of silver is flowing from Switzerland, being refined and shipped out to London so that it can be stored and housed in the vaults for these ETFs. Just a quick note on silver price action on 4th of July. There had been, on the night of the eve of 4th of July, silver had ratcheted up, probably due to Chinese trading, up to over $21 an ounce. And then during the 4th of July, later on during the day, the price got smacked down into about 1950, 1960 range. And it's obvious that once the Western traders come in, that it gets it smacked down. But unlike other smackdowns we've seen in the past, this one didn't stay long, and we'll see the silver price, brushed that off and regained its march heading higher. On the 4th of July, I did a podcast about could somebody buy all the available silver. It's very interesting, for a lot of people think so. It shows that there's really not that much silver in the world that's available to buy. It's either the mining supply or the amounts that are in the COMEX vaults or the amounts that are in the ETF vaults. And those amounts don't amount to too much money. But it's difficult to get at that silver. But in any event, it highlights the tiny size of the silver market. You could check it out if indeed people were to want to buy physical silver in not even large numbers, but decent amounts of money. There's really not much for people to buy, and it wouldn't cost people that much money. In fact, the global silver mining production in 2015 was worth about $18 billion. As you can see, JP Morgan pays that in fines over a few years, more than that, double that. And there's individuals that, I think there's 130 individuals in the world that have more than $18 billion. So it highlights that silver is really a tiny market. It's not worth that much. And if there's any real investment and demand on the physical side, it could boost the price a lot higher. We mentioned China is, the Shanghai Gold Exchange also sells silver, and they seem to be boosting the price higher. There's a couple of stories this week, you can click on them, that mention the silver demand in China. A lot of good stories about gold and silver, and I'm not going to go through them all, but what's obvious is that the mainstream media is paying attention to it. They are kind of also intermixing the positive stories with, is this bull market over in gold? I mean, it's been around for 3 or 4 months, and that's basically the first thing they want to say is, yeah, okay, it went up, but now it's over. They never do that with stocks. They let stocks run for 5 years, never question that they're overvalued, valuations are frothy. Gold and silver go up for a few months, and they say, well, that's nice, but we think the party's over. At least they bring guests on that tend to say that type of thing. So we mentioned American Silver Eagle sales. They were on record pace January, February, March, April, and May, selling over 4 million Silver Eagles a month. In June, that dropped down to 2.8 million. Not a bad number, but not at the record levels that they set almost each month during the beginning of 2016. And it looks like what the U.S. Mint did was they overstocked the authorized purchasers, and they made sure that there was a lot of silver available to buy, so there wouldn't be a shortage like there was last year, because the shortage kind of creates a situation where people realize there's a shortage, the price of silver goes up, and then more and more people want to buy silver. So what they very cleverly did this year was they overstocked the authorized purchasers, and you see in June the purchasers did not buy up the full 1 million ounces a week that they could have, which would have made a 4 million American Silver Eagle sales month. And we'll see later that this month so far, it's through July 8th, they only sold 250,000 American Silver Eagles, and that's driving the premiums down. Dealers are overstocked, and this is counterintuitive. We see this mad rush into silver, but again, as I mentioned, a lot of it's open interest on COMEX, and a lot of it is money moving into silver ETFs. It's not necessarily moving into the new money. Is it moving into the physical bullion? It's moving into the paper contracts. There were some stories on gold M&A activity. There's a story about 2 Chainz and Stephen Colbert eating gold dusted popcorn. Again, you can click on these. I'm not going to go through all of the articles that we list here. Fed presidents were out this week. San Francisco Fed president, I don't, John Williams, I give him no credit or no credibility. He said we were going to do 3 or 4 interest rate hikes this year. That's not going to happen. He also said the economy's doing well, full stop, and that Brexit was no big deal. I think he talks like Bullard out of both sides of his mouth, and hopefully people will stop listening to the Fed in the same way that they had, because they've seemed to have lost a lot of credibility with this crying wolf with rate hikes for the past 2 years and only doing one, and now saying that Brexit is no big deal. And New York Fed President Dudley said that Brexit and other uncertainties allow the Fed to be patient. Well, they've always known about Brexit. Brexit was always an uncertainty. They just don't want to raise rates if they don't have to. This goes back to my whole theory. As long as the dollar is in the range where they like it, and as long as people are buying treasuries, and of course Brexit makes people buy treasuries. It's global uncertainty. People buy treasuries, then they're doing their job. Treasury can fund its deficits through the additional sales of the U.S. Treasury bonds. So Brexit was a good thing for the Fed. It avoided them having to raise rates and allowed there to be this mini crisis where people pour their money back into U.S. Treasuries. U.S. economic data, not good on the factory side, but of course Reuters is out there pumping it as suggesting the worst of the manufacturing downturn was probably over. I don't know how they came to that conclusion. It was like last week when May construction spending was down. They actually wrote this. They've taken it out since. As the effects of Britain's decision to leave the European Union become more apparent. Okay, well, they wrote that in June after Brexit when they got the May construction spending, which was down. But the May construction spending had nothing to do with Brexit. It happened before. But that's Reuters for you. Any bad news is not bad news. It can be explained away. It's even bad news they try to say is some sign that something good is going to happen. Another news agency that I can't put much credibility into because they've been pumping the recovery, the jobs market, and so on, backstopping the Fed, and generally making up stuff that doesn't seem to make a stitch of sense when you actually take a look behind the data. And as we see, the U.S. Treasury yield has fallen to record lows. The pound is down to 31-year low versus the dollar. This is all post-Brexit, so Treasury bonds, lots of demand there now, driving the yield down lower. We put out a very short, we've done a long series on why COMEX default, going through 4 reasons why COMEX won't default. The story never dies. There are commentators out there continuing to say COMEX is going to default. They've been saying it literally for 10 years. It's always imminent. Something always strange is happening, never happened before, and it's going to default. There's so many reasons why COMEX won't default. This video here that you're looking at is just a 5-minute video that explains just one reason why it's not going to happen. I'm not going to go through it here. Please take a look at it. You can click on, if you want more information on all the reasons why COMEX won't default, click on that link. If you want to see just a quick explanation on one reason why COMEX won't default, click on the video there. American Gold Eagles, they were good, the sales, and you can click on that link and you can see where the sales were. I think there were 62,500 1-ounce American Gold Eagles were sold. But Gold Eagle sales are up this year versus last year. So the Silver Eagle to Gold Eagle sales ratio has come down a bit. Even though Silver Eagles are higher, Gold Eagles are much higher than they were last year on a relative basis. So the amount of Silver Eagles peaked versus the amount of Gold Eagles they sold in 2014. And now in 2016, they're selling about 64 1-ounce American Silver Eagles to every 1-ounce American Gold Eagle coin. Of course, they also sell fractional Gold Eagle coins, but this calculation only, and they also sell American Gold Buffalo 1-ounce coins, but this calculation only includes the 1-ounce Silver Eagle and the 1-ounce Gold Eagle. No surprises here. Attorney General Lynch decided, based on the recommendation of the FBI Director Comey, not to bring charges. Case closed for now. One thing that in the Brexit aftermath now is other countries want to or are starting to eye the exit, maybe want to jump ship from the EU Titanic. Citibank mentioned that the Italian referendum represents a bigger risk than Brexit. I'd agree with that. They didn't mention that one of the reasons is that Italy is not only a founding member, in a sense, the heart geographically of Europe and partially culturally, but also uses the euro. And the ECB does QE, buying Italian bonds. If Italy is out, in fact, Italy is probably going to be harmed more being out of the eurozone than England would be, because their lifeline to the ECB printing money and buying their bonds would probably go away. So there's another uncertainty there. You never know how the Italian voters are going to act. You never know how any voters are going to act or how the people that count the votes are going to act. So that adds another level of uncertainty. De-dollarization. Russia is starting to hold yuan as reserves, which is very interesting because the yuan has been devalued. So when Russia buys them and they get devalued, and that kind of cuts against the reserves. But as we've seen, Russia continues to add gold to its reserves. It's increasing as a percentage of the reserves, and they still have some substantial amounts, about 70 billion worth of U.S. Treasury securities. Overall, Russian reserves are about $350 billion. So they seem to be well suited to start adding or diversifying their reserves, and they're going to start holding yuan as reserves. The Fed minutes were released during the week. Not much of a surprise there. Basically, it said the committee wanted to wait and see how the Brexit vote went. Well, we saw it went, and they decided to do nothing. U.S. trade deficit grew. They released that number this week, grows to 41 billion. But the real reason for it was the trade gap with China was up 19.3 billion. So there's a $29 billion difference just in May alone. U.S. Mint sales update. The U.S. Mint reported just this one. They reported twice this week on sales, but only one time did they report selling any American Silver Eagles, and that was 250,000 sold one day and 5,500 American Gold Eagles sold. So the yearly numbers look good. The year-to-date number is 26,500,500, except though right now we're on pace in July of selling about 1 million because they only sold 250,000 American Silver Eagles in the month of July so far. And as you can see, that has made the premiums on American Silver Eagles go down. Last year, around September, you can see Silver Eagle premiums reached about 50%. They've been on a steady decline, and that's because there's plenty Silver Eagles to be had. And many retailers are discounting them, and even the authorized purchasers who stocked up on them are maybe taking a slight haircut and getting, when they resell them to their dealers, because they're trying to wind down their inventory so that if indeed there is another shortage, they can buy more and not have to hold all that inventory. So it's a good time to buy American Silver Eagles, at least from the premium perspective. If you click on that, you should be able to see, actually there's a link, I'll try to put that at the bottom of this, where I track the American Silver Eagle premiums. I try to update that chart once a week. Sometimes I don't. You can email me if you're a subscriber, and I'll send you the chart if I haven't published it on the site. People's Bank of China did not add any gold to its reserves in May, zero. That was kind of a shocker. You can see they've been adding in the teens, 15, 20 tons of gold each month. But in May, for some reason, they did not add any gold. So they made up for that a bit in June. They announced that they added about 480,000 ounces in June, which is about 15 tons. You can click on that link and you can kind of see the history of what China has done in terms of adding gold to the reserves. Keep in mind that China's gold is not all at the People's Bank of China. The numbers that are reported, everyone says they're lying and it's not correct. No, they're not lying. Well, maybe they are lying, but there's a better explanation, is that the People's Bank of China is one entity and they get their gold and they report that amount of gold. But there's gold held elsewhere in China at other Chinese state-run banks, at other Chinese investment companies, with individuals in China. I mean, after all, China produces domestically 450 tons of gold a month. Well, they don't add that all and they don't export it, but they don't add it all to the People's Bank of China balance sheet. So when people say that China is lying, they're not even lying or hiding it. They're saying this is what we have at the People's Bank of China. They're not saying we don't have gold elsewhere. What they're saying is maybe it's none of your business. What we're saying is if, as part of the international monetary system, this is what we have to show. As you can see, it's a healthy amount, but it's 1,823 tons. And if they're mining 450 tons a year, well, quick math tells you in 4 years they'd have more than that, and that's not what they have. So obviously, and they import massive amounts through Shanghai and Hong Kong. So it's just not all going to the People's Bank of China. Shanghai Gold Exchange released its monthly withdrawals in June. They're down again, but the gold withdrawals are less than last year, about 15-20%. But they're higher than 2014, lower than 2013. But it does highlight that there's a bit of a slowdown in the Shanghai Gold Exchange, at least with respect to gold. But there's been a massive increase, as we saw earlier, with the gold ETFs of gold flowing into the West. And that gold demand has boosted the price, and it probably explains some of the reason that India and China have kind of backed off at the higher prices and not bought. India also has an issue because Indian government has high tariffs on gold coming into the country and then has a sales tax on gold. So that's hurt Indian gold demand. But also, Indian gold demand is hampered by the higher price. Indians buy gold a lot, so they're aware and they're price sensitive. It's not like this, they've just heard about gold this week and they see it going up and they want to buy it. No, they buy it all the time. That's their savings. So when it goes higher, they may be reluctant to buy more. American Gold Buffalo coins. We're not going to go through this one, but this is the U.S. Mint's other gold coin. It's 24 carats versus the 22 carat American Gold Eagle coin. And they sell a decent amount of those. But again, they're not selling, just like they're not selling a lot of the Gold Eagle coins, they're not selling massive amounts in this major run-up in the gold price. 14,000 ounces. 14,500 ounces worth of this coin, 62,000 ounces. They've sold less than 100,000 ounces of gold in June. And you would think June was a big month where everyone was concerned about global financial uncertainties and so on, Deutsche Bank, whatever your concerns are about the financial system. That money, that concerned money, is not flowing into a U.S. Mint gold coins, nor is it flowing into Perth Mint gold coins. Perth Mint had a good silver month report. They reported 1.2 million sales of these nice little, not American silver eagles, but these Australian silver kangaroo coins. As you can see, this coin came out in September. They sold about 3.5 million ever since. They sold over 1 million every month except last month where they sold about 980,000. So Perth Mint has a winner on its hands with this silver kangaroo. It's an alternative to the Canadian maple leaf, the U.S. silver eagle, the Austrian Mint's Wiener Philharmonic coin, and it seems to be a very decent seller. The sales are up 217% June over June. There was a story, Jeffrey Christian, he mentioned in an interview that First Majestic attracts silver conspiracy types. He didn't say anything about First Majestic other than it had gone up. He didn't seem to know too much about the company, why it's doing well, other than, quote, silver conspiracy types follow this company. And I sent the article to Silver Doctors. He published it, and you can go over there and you can see all of the negative comments about this particular interview that Mr. Christian gave about First Majestic. Also, he mentioned in that interview that the price at $20 represents a mania in the price of silver, and therefore one should sell. I don't know, I think $50 you may be starting to argue it's a mania. $20, not much of a mania there whatsoever. It's only a few dollars off the bottom multi-decade lows of about $14, $15. Economic data that came out, as we mentioned, the jobs report. ADP precursed the non-farm payroll on Friday. They had an okay report with 172,000 jobs. But again, the construction jobs, the manufacturing jobs, the high-paying jobs, they were down. The waitress jobs, the bartender jobs, the service sector jobs, they're up. And they're part-time for the most part. So we mentioned Perth Mint. Okay sales, 31,368 ounces of silver sold. Well, that's what they sold last year. And again, Perth Mint is a major gold coin dealer, coin manufacturer. It sells usually less than the U.S. Mint, about more than the Canadian. I mean, it's one of the larger mints. It's not like it's a minor mint. As you can see, they're not selling major amounts of gold. They're selling 30, 40, 50,000 ounces a month. You add that with the U.S. Mint and the Canadian Mint, and okay, they're selling 100 and some odd thousand ounces a month, but it's not a big amount. It's not a very large amount. Back in 1999, and back before the Y2K, and back in 2011, sales of gold were much higher. They were selling combined over 2 million ounces a year, but that's not happening right now. And as I mentioned, the ETFs are getting the gold demand, and the ETFs only came out in 2005, and they really pull a lot of the investment money that would otherwise go to gold bullion buying. Now, Reuters, we mentioned, always on the propaganda side. Just before the non-farm payroll came out, they were pumping up the the number, as it was going to be a sign that the economy is robust, and that the other job numbers were an aberration. And I had put out a tweet mentioning that I expected the job number to be good, because if the non-farm payroll number wasn't good, then the Fed would be irrelevant, because that would mean 3 months in a row of terrible job numbers. That would mean you have Brexit, global uncertainty. You couldn't even have the Fed pretend they were going to raise rates and out there yakking and trying to grab themselves some attention, because no one would believe them. But now, if they have at least a good number, they could stay relevant, because they could say, well, the Fed is looking now what the next job number is going to be. Rate hikes might be on the table in September. So they actually needed this number. And remember, the non-farm payroll number is totally manufactured. It's based on birth death assumptions, on how many jobs might have been, businesses might have been created, how many jobs are created. So you knew that they had to have a decent number here, and actually a blowout number, because otherwise, even if it was an okay number, the Fed would have, everybody would just write off rate hikes being off the table. Now, the good news is that this big number did not change, and I saw in Zero Hedge, there was some increase in the percentage of people who think they might raise rates, but it's still a very low number in July and September in this year. But it did not change dramatically the perception, which is a good thing, because the Fed has been bluffing all along, and it's good to see that the economists, even the people that watch the market, people that generally believe the Fed, are starting not to believe them. There's a cute picture of a dog here, basically not paying attention to the, it doesn't show up there. There you go. There's a bubble floating towards him, and doesn't seem to affect our little fellow there. Brexit aftermath. There was a story out, and of course, they always want to make Brexit, everything that happened to Brexit is a bad thing. And there was a story out that retail sales were horrible in June, and I'm sure they were. But they failed to mention that retail sales in July will probably be robust, solid, and stunning, because with the low pound, you got people traveling across the channel from Europe, Chinese flying in, because they can get real bargains now in England, because the price of the pound is so low. But you can't expect them to cover everything, right? Gold 1500. A lot of good stories out there now. They're in the mainstream media. Especially good to see CNBC not ignoring the gold story. Commentators I have on, I know they used to only have Peter Schiff, and they would get him on there and laugh at him when he would make a high gold price prediction. But now they're getting other people on there making the predictions, and they're not laughing at them, which is a good sign. There was a story about Japanese buying and storing gold in Switzerland. There's a story about the case to buy gold miners on CNBC. So they are giving the story a big airing, and I guess they're just trying to maintain their credibility, that they're not just always bashing gold as they had done for the past 3 or 4 years. It's almost like they follow, if it's going down, they're against it. If it's going up, they pretend that they've always been for it. I guess that's just how media works, even how analysts work too. As the price goes down, they lower their price target. The price goes up, they raise their price target. I have a blog post coming out on that, where I go through all of the major bullion banks and what their recommendations are and their price projections. And you can see they're all so off. When the price is going down, they're very bearish. When it's going up, they're overly bullish. And inevitably, they're almost never right. U.S. Mint sales update. This was the second one. This one came out yesterday. and no silver eagles were sold, or reported to be sold by the U.S. Mint, and only 2,000 American gold eagles. So it's not a big American U.S. Mint silver and gold sales month at all. Thank you for listening, and please sign up to receive small gold updates. You can do it at the bottom, you can do it all the way up at the top. I appreciate you spending the time to listen to this entire podcast. You can subscribe to the YouTube channel as well. Thank you very much, and we will talk to you next week.